Ladies and gentlemen, good day and welcome to Medhani Limited Q1 FY24 earnings conference call hosted by ICICI Securities Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Amit Dixit from ICICI Securities. Thank you, and over to you, Mr. Dixit.
Yeah, thanks, Mira. Good afternoon, everyone, and thanks for joining the call today. At the outset, I would like to thank the management for giving us an opportunity to host the call. From the management, we have Dr. Sanjay Kumar Jha, CMD, Mr. N. Gauri Sankara Rao, Director Finance, and Mr. T. Muthu Kumar, Director CNM. Without much ado, I would like to invite Dr. Jha for opening remarks, post which we will open the floor for an interactive Q&A session. Over to you, sir.
Yeah, good afternoon, and I extend my hearty welcome to all the investors joining through this conference call. And also I am joined with, as you told, with our Director of Finance, Mr. N. Gauri Sankara Rao, Director of Production Marketing, Mr. T. Muthu Kumar, and we also have our Marketing AGM and Company Secretary, Mr. Paul. So, in a nutshell, what I want to make a brief, whatever the results, of course it is already published, but I would like to mention some of the highlights for this quarter. So this quarter has been a very unique for us, because in this quarter, the first thing is that there is a substantial increase in our revenue. That means sales has gone up from the last financial year of the quarter one. So this quarter one has gone up by almost by 60%. And also the VOP also has gone up by 26. But the main that the sales has gone up. In addition to that, in this sales also the Rohtak facility has contributed. Almost 20-25% has come from the Rohtak, almost 30% from the Rohtak only. So this is also a good sign for our the investment which we have done in the new projects. In addition to that, this quarter the order booking has also been very good. I think we have crossed more than 500 crores order booking in quarter one of this financial year. And export order also, booking also was good in the opening of this quarter, and we have executed the export order also in this quarter. That was around 5 crore, but it has gone up subsequently. And in that, the major highlight I would like to mention here, that execution of the order received from the Rolls-Royce, that we have completed the first trial order given by them, and now we are in a process to get the next order also from them. And in addition to that, there is a substantial interest, lot of interest is shown by international companies or leading aerospace companies of the world. They have also shown the interest in Medhani materials, and we will be seeing this result as we progress in this financial year. So overall, and recently we have booked an order from, this order is meant for GE Aerospace. That also order booking Medhani has received. So these are some of the important things which has happened in this quarter as well as on today. So with this few points, I would like to take the questions and queries from the investors rather than talking from our side. So I request to give your queries and questions to us. Thank you.
Thank you very much. We'll now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, We will wait for a moment while the question queue assembles. Participants, you may press star and one to ask a question. Ladies and gentlemen, you may press star and one to ask a question. The first question is from the line of Amit Dixit from ICICI Securities. Please go ahead.
So in the time the question queue assembles, I would just like to ask a few questions, sir. The first one is this, you talked about 500 crores of order booking in Q1 FY24. If you can throw some more color on that, which platform exactly this order booking happened, and what kind of execution timelines we are looking
at? In fact, this is a mixed bag of orders I would like to mention here, but majority is from the defense sector and also includes some of the export orders also. So I can give you the breakup of all 520 crores, but mainly it has come from the defense one, which already one order is of 170 plus. Also we have informed to the SEBI also. Then we have got one order from L&T, that is for the space requirement, which we are now, they are manufacturing the 5 sets of PSLV. This will be the first of its kind in the country because of the participation by the public-private participation, by private sector alone. So they are basically having a consortium sort of thing where L&T and HAL, they are participating together, and they are going to make that PSLV. That order was also almost around a value of around 95 crores. Yeah, see. And in addition to that, some of the orders we have received from the space, not aerospace industry also. So we can give you the breakup of those things.
So that is 170 plus 95, and then Aero, how much order was there?
Can you have the breakup with that?
50 crores.
Huh?
50 crores.
Aerospace. 50 crores have come from the aerospace.
30 crores export.
And 30 crores export. And remaining from defense, including missiles and all. It is a mix. We can tell you the total figure. It was in fact more than 500, 520 around. But what I would like to emphasize here that this quarter the order booking has been very good. Of course, it is not that we have done suddenly. It was also in the pipeline. It has materialized in this quarter, and we are now looking ahead for the this quarter also for the better further order booking.
Okay, wonderful, sir. We have a question in the queue. I will come back later.
Yes.
Nigam, you can move to the question queue, please.
Thank you. Participants, you may press star and one to ask the question. Next question is from the line of Sunny Agarwal from SBI Cap Securities. Please go ahead.
Yeah, good afternoon, sir, and thanks for the opportunity. Sir, kind request to shed more light on the export opportunity for Midhani's product. So we have received, as you have mentioned, we have received a good inquiry on export front. So what is the opportunity we are seeing over there in medium to long term as far as export business is concerned?
As we have mentioned earlier also, since we are entering in the export market in the areas of high-end technology like aerospace, so aerospace and oil and gas, etc. So basically those sectors and all, we have to first get approved by the customer. So which I have mentioned is that regarding Rolls-Royce. Rolls-Royce already they have taken our product and it was certified and cleared. So now we are looking for a next order from them. In addition to that, which I have mentioned about the GE Aerospace, that also has not come before. They have taken initially our material, they have checked the properties, and then they have placed the order for the requirement of the materials to us. Again, based on this supply, whatever they have given the order now, they can increase the quantity by further 3 or 4 times, depending on the requirement of that specific grade. Okay. In addition to that, our earlier one, which we have given to oil and gas, also they are also looking for the new orders we expected to come. And I would like to mention here that we are also given the material to Pratt & Whitney, and Pratt & Whitney also has agreed to now give the new requirements are coming from there also. But as and when we receive this type of orders and quantity, we will be definitely informing to the investors, and you'll get the information from us.
Yeah. Sir, my next question pertains to margin profile. Sorry, I'm new to the company, asking a very basic question. So depending on the end user industry, whether it is defense, whether it is aerospace, whether it is oil and gas, does our margin profile varies, or it is irrelevant to track margin based on the end user industry used for our products?
Definitely, margin will vary depending on which sector, which customer you are serving.
Okay.
Also depends on that, and many orders which we are looking for, it is coming under competition only, because export market also is not exclusive to us. You know, any aerospace or oil and gas companies, they are operating at large scale. They are having a list of suppliers with them. So we are getting introduced or even inducted as one of them. So definitely they will not only compare the quality, they will also compare the price also. So first our task is to get it qualified, our quality should be proven with the cost also, because you cannot charge. Then whenever they go for the bulk purchase and all, they will see the price, delivery, and of course the quality is already is getting confirmed by them.
Okay.
So I am talking about the export market, but many things which we are getting, suppose today the day of nomination is not there. It is not that exclusively Midhani will get.
Right.
But there are certain technologies, certain products which already we have made our technology exclusive. There possibility is that we can get on the nomination basis. But there also today government is for any our customers, they definitely will try to compare the price for similar type of material from the elsewhere. So the margin will be definitely, it will be a pressure. You cannot charge anything from the customer today.
But sir, is it fair to assume that on a medium to long term basis, 28 to 30% EBITDA margin is a sustainable margin for Midhani as an organization?
20 to 30%.
28 to 30%, 25 to 30%.
25 can be the max, it is possible, but 30, 35, I don't think it is a future it will be to get.
Okay.
If we are crossing 25, it is great. That's what I can tell you.
Okay. And sir, again, one very basic question. So our inventory on books is very high as compared to our sales. So any plan to reduce our working capital cycle, core working capital cycle, or it will the nature of the business is such that the inventory days will continue to remain on a higher side only?
Your both statements are true. Nature of business also is like that, but we also have planned to reduce the inventory. We cannot simply take the shelter of nature of business and go on building up the inventory. So we have a continuous plan to cut short our inventory. We are working towards that, and result, of course, it will not come immediately, because whatever material we are using now, the cost also is going up. Probably, if I am using the low steel and very cheap quality of commodity, that control will be faster. But since we are all high-end products, so the value will be going so high that even the tonnage is less, money-wise you see that it will going up.
Right.
Problem is that, and our product is that we have the mix of products. Sometimes we are having the steel normal steel, sometimes we have a very high-end product, nickel-based alloys, and their additions will be so high. Some of the material will be costing around 4,000 rupees, 5,000 rupees kg, single element. So these things will definitely have pressure on that.
Okay.
But
And
we have a plan to cut down the inventory. Our regular review is there by our auditors, audit committee, board, and even at the level of our directors. So regularly review and see that how we can cut down our inventory.
so, sir, any guidance you would like to give on how we are going to reduce the inventory over next 2-3 years? If you can share.
Guidance is very clear that recycle more and more material, whatever you produce, if it is rewards coming from your system. We are making a policy where we should have the zero waste, zero material should be there. So this is what the policy is there. We are trying to track each and every heats now, each and every product, and try to recycle it now since earlier the volumes were less, now the volume is increasing for high-end alloys, and number of alloys also is coming down. So it is possible to do that. So that we are trying to do that in that way.
Thank you. Sunny, sorry to interrupt you. I'll request you to come back in the question queue for a follow-up question. Ladies and gentlemen, you may press star and 1 to ask the question. Next question is from the line of Harshit from Elara. Please go ahead.
Yeah. Hi, sir. Thanks for the opportunity. Just wanted to get a sense on the capex which you had earlier indicated, which you will be doing in white plate mills, the armored facility for helicopters, etc., and any other new capex that you are looking at apart from the aluminium JV which you have with Nelco. So update would be very helpful on commissioning and what kind of a turnover one can expect. Thank you.
Yeah. I think you are asking about the earlier committed capex for white plate mill.
Yeah, sir. Yes.
White plate mill already we have commissioned, and it is running now from last almost 1.5 years. It is running now. And also we have commissioned our Rohtak facility for armor facility, and many other projects we have indicated earlier has been commissioned. Coming to the future projects also, we have indicated at some place that this year we are going to spend at the tune of around 80 crores for the capex expenditure. So we are very much on the track now. But anyway, the limit of capex also we have to keep, because unless whatever capex you are doing is converted to the sales or getting the revenue, we have to take some limitations. So, but we have kept that capex. It is not that we have made it nil, but we are already having some plan for the capex. We will inform you as and when. But you can check our even our annual report or annual. It is already available that whatever equipments we have installed and commissioned in I think last 2 to 3 years. It is available.
And sir, the 80 crore capex which you plan to do this, towards what, if you can share, and status on the Nelco JV, sir, where we are investing with plus crores of capex.
In Nalco JV is a very huge capital investment project. There the requirement is very large. The figure is very high. Almost it was envisaged around 170 crores earlier. But the major question mark is on the project viability itself has come, because aluminium consumption in India, high-end consumption of aluminium, whatever was expected, forecast was there earlier, that we are not able to see the demand in coming next 5 years. So, considering that, we are not able to make a viable report on the project DPR to go for that support from the loan from the banks and all. So it is held up at that stage. We are still trying to work out. But as on now, we feel that investment in that project is not viable. So we have keeping it hold, and we are trying to invest in the areas where we see that opportunity is there for Midhani for quick conversion or quick realization of the sales by investing our precious capex.
And the 80 crore capex which you are doing is towards which facility, sir?
We have the various facilities. We are now putting the faster plant for making the aerospace fasteners. Aerospace fasteners are getting imported in the country in the large quantity. So we are trying to make that aerospace fasteners plant. In addition to that, we are also having one titanium plant where we are going to make the titanium ingots. So enhancement of our capacity in titanium, that plant is there. Then we have some modification in our bar and wire facility where we see that a lot of opportunities there in the area of filler wire and all. So these are the different. These are basically the augmentation of our facilities. And skull melting also we have commissioned now. So skull melting for making the titanium castings.
And the white plate mill facility which you had started, 1.5 years back. What is the revenue run rate that you have achieved from that facility till now, sir? On a yearly basis or a quarterly basis would be helpful.
Last year was around 40 crores. Around 45 crores we have got last year. In addition to that, we have also done some savings from there, whatever outsourcing. So, but this year is basically this year which is coming in the full-fledged. Last year it was only in the 1 quarter, 1.5 quarter only it has given the full potential.
This year we planned around 150 crores.
So this year we are going for 150 crores from that facility.
From that facility. Okay. And what is the current order book which you have, sir? And is it possible for you to give the breakup in terms of defense and aerospace as far as the business is concerned?
Yeah, we have today 1570 around 1570 crores order book, and in that some breakup I'll say 26% around defense. Just you.
Yes. Yes, sir. Hello.
I'll give you. I have made that paper. We will give you, no problem. But I'll tell you total we have 1578 we have.
And by end of the year, do you expect to cross 2,000 crores in terms of order book, sir?
In that 70% is defense.
Okay.
And balance 30 we have space, aerospace, railways and others.
Okay, sir. Okay. Thank you, sir. Thank you very much. And all the best.
Thank you. Participants, you may press star and 1 to ask a question. Ladies and gentlemen, you may press star and 1 to ask the question. Next question is from the line of Khush Nahar from Electrum PMS. Please go ahead.
Yeah, hello, sir. Thank you for the opportunity. So I just had one question regarding the order inflow. So what kind of order inflow are we expecting, say, in the next 3 years?
Next 3 years?
Yes, like seeing our first quarter was 550 crores. So would that be a sustainable order inflow expected?
Yeah, this year it is expected. See, today market is good. Whatever you can at least execute, you can get. Market is not the problem. And I think one of the biggest thing I am able to see the opportunities for Midhani in the near future is coming from indigenization of aerospace material. So department is now pursuing in the big way to indigenize the materials for our earlier platform like Sukhoi, then also for now, LCA also is now getting import also, export also is there, plan is there for the LCA. We are also finding the LCA, we can get the good requirement. AMCA project also development work is going on in the full swing. LCA Mark II is coming now. The Mark II also we are getting some initial orders we have got. So many things are there in the pipeline. Then some of the development for 110 kilonewton aero engine for AMCA. So initial material development program has been finalized by development agencies. So many things are lined up, and you must be listening about the different type of missiles and all. Also is coming. Sure.
Right. And sir, just the second question, what would be the execution period of our order book of 1578 crores?
It varies. I cannot say that many orders are there which I have to finish in 3 months also, because the export order time is very less. We can give in 3 months. But some of the orders we have the span of around 2 years also. So it depends on that. Many things required for that, like naval application, we have some orders which varies from 1 year to 1.5, 2 years.
Okay. So average, like, within 2 years,
average time. If you see my, I have to. I can. If I say the order total order, this order is for our Midhani. I can say for 1 year, 1 year, 1.5.
1.5 years. Okay. Thank you, sir.
Thank you. Participants, you may press star and 1 to ask a question. Next question is from the line of Romal Jain from Electrum PMS. Please go ahead.
Yeah, hi. Thanks for the opportunity, sir. Sir, I just want to understand in the backdrop of the strong indigenization efforts at the at India level, how has Midhani positioned itself over the last few years in terms of manpower, material, policies at the company level? Because as the order flow keeps on getting stronger and stronger, I think we will need to be much more agile. So if you can just give some more strategic understanding of what's happening at the corporate level.
See, as you have rightly told that indigenization, there is thrust on indigenization. So what you need the capacity, you need technology, you need the skilled manpower, you need the proper policy in place to, like I say, corporate governance. So all these things are in place. And regarding capacity and all, in last, as you have seen the capex infusion by the company in the last 4-5 years, which has been quite good. I think those things are now paying us because we have the sufficient capacity to handle the requirements coming from indigenization part.
Okay. And second is on aerospace as well as the titanium project that you mentioned. So just want to understand on the titanium side, at what stage we are in terms of finalization of the projects and when the revenues can start coming in, and broadly what kind of revenue can come post the titanium projects are in place, and whether titanium would be helpful on the indigenization of the aerospace equipment and engines and sorts of that. So just to as a complementary question on aerospace as well as titanium, if you can throw some light.
The aerospace, we have broadly 3 classes of materials are required.
Okay.
Special steels. Then you have nickel-based alloys, super alloys. It is called super alloys also.
Okay.
And titanium alloys.
Correct.
So Midhani, we have all the 3 areas we are working. Now what we are doing in titanium, that we are augmenting our capacity. We have right now titanium, we are meeting the requirements. But we are augmenting our capacity in titanium because we have set up a white plate mill also.
Okay.
So there also we need some input material so that we can make the flat product using the rolling. So considering that this facility has been expanded, and already this month we are going to commission the entire facilities.
On the titanium side.
Titanium side. And superalloy already we have our capacity is sufficient. Of course, we are improving our equipment capability, technology. Those things is a regular phenomena. But superalloys we have no problem as far as the capacity is concerned as on today. But there also I am seeing that good demands are coming in the future. Probably we have to augment some more facilities, for which already our people they are working, and we have some projections for our future equipments and projects. It has been planned now.
Okay. And in terms of bid pipeline, in the last 2-3 years, how has the bid pipeline changed for the company? Because we have seen very strong order inflow in the last 2 quarters or so. So, before the indigenization efforts and everything that the government took, and presently when we are sitting on this order book as well as pipeline, how has the pipeline shifted? If you can put a number to it and the conversion, it would be really better to understand.
I didn't pipeline is order flow you are telling.
No, bid pipeline. So we would have bid for certain projects which we have not got yet. Yeah. So how that has changed over the last 5 years?
Okay. The bidding in the sense that it is not bidding. We are as and when we see the requirements, we are bidding against that. But as I am just talking about at the level of equipment sanctioning itself, the Ministry of Defence has taken a very quick action, and whatever is the requirements coming from the country, like you have seen in recent past, I'll give one example of Tejas only. Tejas they have sanctioned, they have also given the ALH, that helicopters. They are also sanctioning the different types of other requirements like missiles. So those things are getting sanctioned fast. I think that is where the Indian industry, not only Midhani, other industry also they are getting benefited. So the moment we have that type of inflow will be there, the requirement of materials will start increasing. And in addition to that, there is a need now, considering the current global scenario, that whatever you have your Russian origin platform or some Western origin platform, you have to make your own material so that in absence of cut-off in supply chain, your platforms should not get affected, your operations should not get affected. That is the reason where there is a focus on that Indonesian on the material which we are importing today for existing platform also. So one is that new platforms are getting sanctioned by the government quickly, and existing platform also there is a need for Indonesian of the raw material.
Thank you. Romil Jain, I'm sorry to interrupt you. I'll request you to join the queue again for a follow-up question. Next question is from the line of Rohit Ohri from Progressive Shares. Please go ahead.
Hi sir, couple of questions. The first one being, you mentioned that you're working with some leading airplane manufacturer, and if we go to the industry, Airbus, Boeing and Tata Consortium, they are looking at a lot of developments in the civil final assembly lines. So is it fair to assume that Midhani can play a role over there for these giants and big players?
Yeah, in fact, you are talking about the Tata Boeing.
Yes, sir.
Yeah, Tata Boeing is already having one facility in Hyderabad, and they are working, making some of the, I think, sub-assembly for them in here. So we have also seen we have explored the possibility of getting included in the supply chain, and we are already discussing with their team, and it is possible to enter in that domain also. And there is no bar there for the civilian or military. In fact, they are working all for civilian aircraft. So I am sure with the aerospace industry growing, Midhani will have the opportunity to enter in that area also. And in that situation, maybe our existing capacity may not be sufficient. We have to look for some more addition of the facilities. But we have the technology for that. See, whatever material is going for aerospace industry, going for the air, military or civilian, material will be same.
Okay. Okay. So when you say that the order book for the export is going to be like 3-4 times, so are you looking to close the year with export orders of more than 100 crores or something?
Yeah, in the tune of that, correct.
Okay.
Yeah.
Is it more than 100 crores or is it?
I will tell you our target is to go for more than 100.
We are having order of 135 crores.
So we have right now more 35 crores is available already. Around 15 crores already we have executed. So we are in discussion with the part firm for another 30-35 crores.
Okay. Okay. So when we talk about these order book and the short cycle and long cycle, what proportion of it currently is a short cycle order book and what is a long cycle order book?
Very few long cycle. 50-50 you can say. 50% say long cycle, 50% is short cycle.
Okay. So that does that explain the reason why margins, or maybe that you have cut down your guidance to somewhere like 25% EBITDA margin? Is that the reason that the short cycle orders they get us little?
Short cycle order is better for the company because you have to get quick money, and short cycle is better. In fact, if you are getting short cycle order, it is better for the company to performance. Only thing is that what type of margin you are booking the orders. And order booking depends on that in what is your domain of working. If you are going in the international supply chain, that will be there. If you are also bidding against the competitive bidding in the domestic tender also, there also the cost will come down. So the market is competitive, definitely. But the market opportunity is good. I'll say market is competitive, but opportunity is good. Okay. We have the good potential now.
So that will get you volumes and sacrifice a little bit on the margin front is what you're saying.
Yeah. That is there. True.
So last two questions related to the raw material. I understand that there are certain difficulties, but was there a one-off in this quarter related to the raw materials where you must have kind of liquidated some old raw material or some old assets, and because the percentage, if you see, of raw material is quite high for the quarter under review.
Yeah. In fact,
we produce more superalloys.
Actually, what our Director of Finance is already putting this your answer of your question. Because of our product has changed to the very high end. See, earlier, if I was selling a steel of, let's say, 2,000 rupees per kg, now I am selling a superalloy at the 4,000 rupees per kg. So definitely the cost of your input material will go up.
Okay.
So we have to go for nickel, we have to go for cobalt, we have to go for moly, we have to go for tungsten, and these things are very costly in nature. Earlier, that product mix superalloy was very less for the Midhani. Now, whatever superalloys we have done the last financial year, in entire year, only in one quarter we have completed that much quantity.
Okay, so going forward, this kind of the ratio for the raw materials will continue, is what you're trying to say.
Yeah, raw material cost will be definitely the higher side. There is no doubt.
Okay.
If we have to serve the today's market, because market is also looking for that type of alloys only, which is difficult to get elsewhere.
So my last question is related to this inventory that we continue to have. Sir, I understand there are certain strategic material which is lying with us, and probably there could be an event where there could be certain orders which might come where we can use this strategic material. What exactly are these kind of orders? Is it related to HAL Tejas helicopter, or maybe due to some super conductivity materials? What are these orders which, if they come, then are...
I'll just try to, first of all, some of the word I'll try to answer you. Superconducting has nothing to do, we are not making any superconducting material. Superconducting material is totally different, and no people nowhere in the world they have come to that stage of making superconducting material. Coming to our scrap position, precisely as you mentioned about the HAL, for aerospace industry is responsible for keeping us more amount of inventory because they are having a condition that you cannot use a recycled material for making any product. A product has to be made for aero engine or any moving part in the aircraft or even the other non-moving also should have the pure raw material. So whatever rewards we generate in the process, it will remain lying with us. So if we have another customer where this type of conditions are not there, we can serve those things. So now we are trying to get some of the customers like that because either from the domestic or from international market. If it is there, we are trying to consume those things, those materials.
Okay.
But aerospace will not allow to use recycled materials. Yeah.
True, sir. Hopefully these orders come maybe in next 1 year or maybe 2 years, and hopefully these inventories get liquidated. And the question which keeps coming every quarter as to what we do with these inventories, that question will be eliminated, and there would be a lot of cash flow that would come. Thank you, sir. Thanks a lot for answering my question. Thank you, sir.
Yeah. Thank you.
Thank you. Next question is from the line of Prabir Adhikari from Ratnabali Group. Please go ahead.
Hello.
Yeah, hello.
Prabir, you're not audible.
Yes. Am I audible right?
Yeah, audible.
Thank you for the opportunity. So my question is regarding this aerospace industry. As you said that
Sorry, Prabir, your audio is not coming clear. Can you please speak through the handset?
Yes. Is it okay now?
There is a bit of echo while you are speaking.
Am I audible right now properly, sir?
Slightly better.
Okay. My question is, you said that aerospace material are segregated in majorly 3 parts. One is this titanium, another is super alloys, and there is a specialized steel.
Yeah.
I wanted to understand this aerospace market in India. You said that indigenization of these materials will give these companies a revenue stream. Now, right now, what is if I consider a fighter jet, so out of, say, for example, if it is a 100 rupees cost, so this aerospace material cost would be how much? And probably all these components will not be able to manufacture in India because of the absence of the capability. So what is the capability we have in India that we can manufacture part of that? So that is what I want to understand, sir.
If I have understood correctly, you are asking first what is the cost of materials used in a given jet engine. Is it correct?
Jet engine or an aircraft, sir.
Aircraft is different. See, aircraft per se is having a totally different material. Aircraft, if you see, aircraft is going today with the composites. It is having the aluminum alloys. It contains many other things there. But what we are serving, basically our material goes for the mostly for the aero related products. And some of the aircraft also, but
Hello?
So can you hear us? Participants, please stay connected while we rejoin the management back to the call.
The person you are speaking with has put your call on hold. Please stay on the line.
Ladies and gentlemen, thank you for your patience. We have the line for the management reconnected. So you may go ahead.
Yeah. Okay.
So the line for the participant dropped. Ladies and gentlemen, you may press star and 1 to ask a question. Follow-up question is from line of Prabir from Ratnavali. Please go ahead.
Hello, sir. Am I audible right now? Hello?
Hello?
Yes, sir.
Yeah.
Go ahead.
Okay. As you said that basically the aero engine market which you are right now catering. So if that is
The person you are speaking with.
Hello.
Yeah.
So I'm saying that out of this, for example, if I consider this aero engine market 100, then what is our capability, Indian company's capability in that? And in that capability, how much is capability of DPSUs and how much is private?
You are, I think, asking about the aero engine market potential.
Not market potential. I'm asking that if a market is 100, then do we have the full capability to cater to full 100, or for example, only 60% of that market we are right now capable to meet? So if we are
so today, aero engine market is a big market. If we are able to even serve the 2% also, I'm just mentioning 2% also, it will be a very big achievement for us. Aero engine market is a very big market, I can tell you. So as I have mentioned that if it starts growing in the country, definitely we have to also increase our capacities in the future. And probably we have to look for that we can divert our business from other two aero engines. So aero engine market is at the nascent stage in the country now, very beginning stage. And one advantage with our company is that we are in the aero engine materials right from the beginning. So we have no problem in establishing our credentials in the market and our quality capability. So that's what we have mentioned earlier, and we are picking up on those sides. The first step towards that, we have trying to I think, attach ourselves for getting certified in the international supply chain with the aero engine manufacturing company. So those things are getting certified means you have a better chance. If it comes in the India, we can directly, like you might have seen, the GE has already is trying to see that how they can make the engine with the HAL. Then we also have the Safran also has plans. So those things also in the annual now. So we are trying to see that how quickly we can establish ourselves as a aero engine material supplier company.
Okay, sir. Good enough. Thank you.
Thank you. Next question is from the line of Amit Dixit from ICICI Securities. Please go ahead.
Sir, just a couple of questions from my side. Now, this quarter we saw a very good revenue growth, and you have mentioned that the order booking is also robust. So, would you be willing to revise your guidance of 20% top line growth for this year? I mean, in FY24?
We have not revised it, but definitely we are having more than 20.
Okay. So the second question is more of a strategic one. During PM's visit to US, there were 2 agreements under discussion pertaining to security of supply arrangement and reciprocal defense procurement agreement. Now, these agreements were essentially in light of what you discussed in the last call about you working with the US aerospace companies. So just wanted to understand where we are under these agreements. Have they moved ahead? Is discussion going on, and how much we are involved? I mean, how much benefit we will get from these if they're executed?
Hey, you are talking about the agreement means like deal you are talking?
Yes, the agreements that were under discussion during when PM visited the US.
See, what I say that, as I mentioned earlier also, that since we are trying to enter in the international supply chain of the GE, so definitely when the GE is setting up facility in India, we will have a fair advantage and better advantage to tie up with their thing. But right now, there is no commitment as such that they are going to take Midhani for all the requirements, because this is also in the preliminary stage. But we are trying to see that how we can get qualified or getting established as a material supplier to GE aero engine domain.
Okay. Sir, 2 more questions from my side. One is there was a media article suggesting that you have received order for armor for this Arjun MBT from Agni. So just wanted to get a sense of how much is this order and when the timelines of its execution.
Hey, we have not received the order. I don't know why it has come in the media. We are in the process of negotiating the order, because we are having the technology for that. So we are now in the process of getting that. But the values and all right now, cannot tell you the figure. As and when it is coming, I'll definitely give you the information that what is the amount of the orders. But we are in the process of negotiating with them. Because earlier also we have supplied. Earlier also, Midhani has only supplied that type of material for armoring of the tank.
So when is it expected to be awarded, this particular order?
Shortly, I am seeing this quarter. This quarter will be there. By this quarter and second quarter also.
Okay. So the last question from my side is that after this titanium capacity is commissioned, what would be the capacity mix between titanium superalloys and the specialty steel?
Capacity-wise, it is a product mix. But what I say, titanium addition will be almost 500 tons we can produce extra. Whatever we are producing now. So we'll be almost reaching around 750 to 800 tons per annum.
Okay. Okay, sir. Great. Thank you and all the best.
Thank you. Participants, you may press star and 1 to ask a question. As there are no further questions, I will now hand the conference over to Mr. Amit Dixit for closing comments.
Yeah. Hi, everyone. Thanks for attending the call, and thanks for very patiently answering our questions. I will now pass on the call to Dr. Jha for closing remarks. Over to you, sir.
So, okay, closing remarks, I will tell our dear closing remarks. I'll ask my Director of Finance to talk.
Yeah, thank you very much. Thank you all the investors for your valuable questions. Medani is progressing every quarter by quarter. As you rightly said, you people said that the inventory levels, which we are our concerns were already expressed. We are in the way of controlling the inventory. When we are producing high value material and the present conditions of the increase in cost due to the present international market conditions like Russia-Ukraine war, getting the material itself is a difficult situation. Still we are managing, though the prices have increased, but with our operational efficiency, we are able to maintain the margins. As investors expect more margins, but the margins may not come in percentage terms, but we assure that in absolute terms, the margin will go up. That means the EBITDA or net profit, the PBT and all will go up. And our plan is to increase the revenue than concentrate on margins and utilize our facilities at optimum extent. Thank you once again. Thank you all the investors. Thank you very much.
Thank you very much.
Okay.
Thank you. On behalf of ICICI Securities, that concludes this conference. Thank you for joining us. You may now disconnect your lines. Thank you.